Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a report from the Calamos family of closed-end funds, and let me tell you, it's a bit of a mixed bag. We are going to be looking at items like their reports to stockholders, statements of cash flow, etc., all the fun things. If you want to learn more with me, make sure to hit that subscribe button and join our Discord community. You can find it in the description below. This report gives us a snapshot for the first 6 months of 2025, so let's jump right into what these funds are holding and how they're performing. These funds use a blend of investments, including convertible securities, the big story here, and also equities, fixed income assets, and what they call alternative investments. It's all about trying to get that steady income stream for investors while balancing the risks in the market. They're shooting for sustainable long-term payouts. Now, this is something that may pique your interest. It seems as of April, each fund is giving out a monthly distribution to shareholders ranging from 5 cents to almost 20 cents. Precisely 1950 cents in the Calamos Dynamic Convertible and Income Funds case. But remember, don't jump to conclusions about a fund's performance just from those distribution amounts. It's only a piece of the puzzle, not the whole picture. Speaking of changes, the board shifted 3 of the funds with CCD, She and Chai taking notes, from a managed distribution policy to a level distribution policy as of January 1, 2025. Basically, they are transitioning away from calculating the distribution based on funds' net asset value fluctuations. Instead, they chose specific dollar amounts. That's that they are transitioning away from calculating the distribution based on funds' net asset value fluctuations. Instead, they chose specific dollar amounts. Taking a quick glance at the numbers for April specifically, funds such as Global Dynamic Income Fund, Global Total Return Fund, and Dynamic Convertible and Income Fund are demonstrating negative accumulated earnings or loss. That can't be too good of a sign. Next up are the statements of operations, showing how the funds made or lost money. What jumps out? Well, right off the bat, most funds report net investment loss. With most funds in the red, they clearly had their challenges. For example, the Strategic Total Return Fund lost over 12 million. That hurts. Next, we take a look at the statements of changes in net assets, tracking how each fund's overall value has shifted. In this section, the losses in this report becomes clear, with multiple funds showing net decrease in net assets applicable to common shareholders resulting from operations. For example, the Strategic Total Return Fund decreased more than $180+ million, and Convertible Opportunities and Income Fund decreased by $36+ million. Lastly, let's take a peek at the statement of the cash flow. This is a key area in the report to see how is the money of the entity flowing in and out, to get a better image of what is actually going on behind the curtains. A lot of these funds are not actually increasing the cash amount, although I'm happy to see they are not bleeding cash either. Calamos, Convertible Opportunities and Income Fund is one that showed a significant increase in their available cash, clocking in at almost 90 million in cash flows provided by operating activities. For the financial highlights section, the report contains a great deal of data, specifically for individual fund shares outstanding throughout each period. Key statistics such as net asset value and market value are present. Notably, numbers vary depending on which fund you are looking at, as a lot are operating in a loss, having to resort to selling their own debts through mandatory redeemable preferred shares, and having to spend millions annually in interest payments. Now, speaking of debt, all these expenses accumulate over time to something huge. Interest expense and amortization costs are a massive liability, consuming any profits that these companies might have had. These expenses are in the millions of dollars. Time for looking at the investment portfolios of the funds themselves. While there are some notes for schedule of investments that are important, it's mostly legal jargon, so all you have to keep in mind is some are off market, and for those who hold international stocks, they use different rates to calculate returns. All seem to be doing standard stuff within their portfolio, with minor differences. CREF Strategic Total Return Fund invests in US government securities, with 3.9 IS in Travant Dynamic Convertible and Income Fund makes little to no investments in government securities. Fixed income securities make up significant parts of portfolio, reaching more than 50% of the investment on most Calamos funds report. Calamos reports paints a picture of a financial structure that is somewhat in a tough spot during first half of the period. However, it seems to be stable enough. Investors should keep an eye on them. while distribution rates are high and tempting, the reports from the funds seem to demonstrate negative net incomes, with some funds having to deal with the cost. And remember, these are fixed income securities, so if rates continue high, these expenses may not fall down. Ultimately, it depends on your own investment strategy, but a general rule of thumb is to look for more income and less reliance on borrowed money. And well, that's it for today. I hope you've enjoyed me cracking open this corporate filing. Now, what are your thoughts on all of this? If this was helpful, leave a comment, hit that like button, and of course subscribe for more content. Don't forget to check out our Discord community in the description. See you all next time.